Yes, good evening. It's Jim from JAGfx.com. It is Monday, the 9th of December 2019. This video is just going to go over a few high probability trade examples. Just how I look at the charts, look at the better setups, look at some divergence possibly, and just my general thoughts on trading. This has come about as a result of a couple of requests in the Facebook group, so hopefully this will help you out a little bit and give you a few more ideas. So we'll go across to the charts and we'll have a look here. Now, what have we got here? USD Japanese yen 4 hour. This is on MT5 if you're wondering what platform it is. All right, just, you got to keep in mind, I've been looking at charts since the mid-90s, I believe. I did a couple of courses back in the day where before online stuff, so I actually hand drew bar charts, swing charts, that sort of stuff, all based on very basic GAN. Now, the jury's probably out on WD GAN, but, he's a bit of a how would you describe him? He's obviously a fanatic about trading and that. Now, how successful he was is debatable, but he had some great ideas. Some a bit, what people would consider a bit loopy, but his basic theory about ranges and how they move and that is pretty solid. Markets don't go up and down the straight line. And as you can see, just by looking at this chart in front of you, goes up, goes down. And in between, when it's going down, it has little pullbacks. You see them all the time. It rarely travels in a straight line unless it's heading parabolic for some unknown reason, normally something based on news. Now, what I learned from reading up on GAN, I read a few of his books, and look, they're the most boring books on the planet, but normally it's like an ABC or a 1, 2, 3 pattern, so you have a range. For example, I'll see if I can find something that's pretty straightforward. Something simple like this. You got a range that goes up, he counts that as like 100%, so it's A, B, then it comes down, that's your C, and goes back up. So what he's saying, that'll go up, come down about half approximately, and should go up the same distance again. Look, it's never going to work perfectly, but you'll be surprised how close it is. And because we've got traders that trade off fibs using Fibonacci and that, I don't know if it's self-fulfilling or not. A lot of trends just pull back sort of a required distance. Something I reckon this one here would be pretty close. For example, from there down to the low, then back. See, it's nearly touched it's around the 50. There's a 50 there. That's 61.8, which is another big fib number. I swear these vendors just wait till I start a video, then they just right up our street. I haven't heard them all night. So, but anyway, yeah, see how it's pulled back around the 50, then back down. So that's you see that all the time, all right? So that's just, what have I done there? So there is a structure to markets, and you sort of, because I'm looking at historical charts all the time, and I've been on charts for years, you get a feel which way things are going to move. Now, with my setup on high probability, I use the MAs. We all know it's the 50 EMA, the 100 EMA, and the 240 linear weighted moving average. Look, you can use any MAs you want. They're just a guide to give me an idea. Like when you see them like this, it's obvious. You don't really need the MAs. You can see that's heading up. But when you see the MA stacked like this in the correct way and they're spreading, that's a good trend starting to form. And your safest trades are trades with the trend. Doesn't matter if the trend's up or down. And that's a beauty about currencies, because as we all know, currencies are made up of two pairs. Two currencies. A pair is made up of two currencies. So even though one might be tanking, like we're looking at USD, Japanese yen, the USD might be copping a flogging, but the yen might be strong or something like that. One goes up, one goes down. Then next day that could reverse. So that's what I like about currencies. They're easy to trade in both directions. Unlike stocks really generally have a positive bias, because everyone wants the company earnings, company to go up. Stakeholders have got an interest, that sort of stuff. But currencies go both ways, and basically all trends come to an end. So if you're looking at a chart, something like this, we're in an uptrend, right? So you keep on, all right, we go up, come from the left here, we go up, we come down, we go up. We're not breaking the previous high. So it's, it's a sign of weakness. But then we come back down, bang, and we do break the previous sort of high. So you could say we're back in an uptrend. The lows aren't going any lower, but the highs are getting higher. And we have this pullback, then up we go again nicely. Then there's a bit of a rollover, then up it goes again. So we keep on taking these previous highs out. So that's a sign of strength. So you want to be trading with that uptrend. I know this is all in hindsight. I get that. It's easy to scroll back through charts. Now here you see we have a decent pullback. It breaks this previous low here, but it's coming back into the MAs, and that's what I want. Really, ideally, you want to see trends come back very close or into those MAs, then bounce off them. It's a classic type of trading. Some people just trade off this 50 EMA. In an uptrend, they'll just, every time price touches it, they'll take the buy. Like I like the confirmation, the QMP filter, and using the MACD Platinum. So for example, this here to me is not a great setup, just because price is too far away from the MAs. Even though it was a winner, to me, it's not an ideal setup. The MACD Platinum's in a good spot, sure. It's a green dot on the QMP filter. We're in an uptrend, but it just didn't pull back enough for my liking. Whereas here, this is an excellent setup. And this one here would be a good setup. This one here would be a good setup. So they're good little setups. Just keep your stop below the lows or below the 200, something like that, with the trend trades. If you want to play it safe, take these trades. Remember, with the MACD Platinum, buys the blue dots below the zero level, which will be in combination with the QMP filter dots. So generally 95% of the time the dots have to be below. The only time we won't look at that is if we've got great divergence, and I'll see if I can find examples of that. So something like this, below, up, below, even though it's not great signal, it's still a valid signal. It's probably this one here would be like an A+ setup for me. This one here would be like a B-. You might go in with, instead of, if you normally risk 2% on a trade, you might only risk 1%. You might keep your stop tighter. You might keep a better eye on it. It's not, I wouldn't take this trade personally because there's better ones on offer. And if you're in this one here, there's no reason you should be out of that one. You might have closed half, say, for example, brought up your stop to break even, but you're in an uptrend. Have a look at the big picture. You don't want to tighten up your stops too tight if you've got a trend like this that could continue on. And look how, I know it's hindsight, I get that, but it's gone up a long way. So they're the good trades. Taking trades against the trend, even though you may have some sort of divergence. See if I can find one. Well, here's a good example. So here we've got your regular bearish divergence, right? So we've got high highs on price and lower highs on the oscillator, the MACD Platinum. It's a valid bearish divergence setup. Even though the MACD Platinum's just on the zero level, or just, this is what I was talking about before, as long as one side of the MACD Platinum's on the correct side, which is, in this case, it's the first point, doesn't really matter. All that, if it's still a valid sell entry setup, but it just takes away the use of using the MACD Platinum as a potential money manager assistant sort of thing, So this here is a valid setup, but they're high risk. Regular divergence, remember, regular divergence is generally looking for a trend reversal or a major pullback. So you're basically catching a falling knife. You'll be selling that open to that candle there. look at this. It's been an uptrend all the way, so you are looking for a reversal. Sometimes they work. Now, this one, you would have got a few pips because you generally just want to drive it back into the MAs, then tighten everything up. But you'd probably want to go on the lower risk, and I'm going away from hedging on these type of setups now. It's just too risky, especially on fast-moving pairs like the yen pairs or the pound pairs and stuff like that. Just too risky. So a stop would be up here. You're probably going with half your normal risk percentage. Take the trade. It's a valid setup. It's probably a B plus type setup. It's not an A plus because you're going against the trend. And sometimes these will work like unbelievable. I think we'll probably see this one up here when we get to it. So that valid setup, but just be careful because you're trading against the trend. As soon as you get back to this one here, take that. It's a buy. Put your stop below here or down here somewhere. Prices come back into them A's. You're in an uptrend. Take the buy. Goes up, doesn't go up far. You get your MACD platinum breaking through the zero level up here somewhere. As soon as it gets into this little cluster of candles here, and this is 4 hours, so there's 12 hours, 16 hours in there to move your stop. So all you can do is close half and put your stop on your remaining half of break even, and that would be where that horizontal crosshair is, and that would have probably kept you in that trade all the way up still. Even if you were stopped out, you wouldn't take this sell trade. It's not. The only thing that might get you interested here is a possible sort of double top scenario. I like double tops. Love double tops. Love double bottoms, triple tops, triple bottoms. I generally take most of them. This one here, the price is on the 50 EMA. It's not a high risk trade. It's just it's a low probability trade. We're still in this big uptrend, so you're going into it, and even the MACD platinum goes through the zero level when you only cut a few points up, a few pips up. You know what? Geez, like 14 pips or something. There's just not much wiggle room, as I would say. But I like the double tops. If the MAs were rolling over, that'd be a lot better, but they're not. They're still sort of heading up. They're spread. You're in an uptrend. It's probably not the smartest double top to take, so I wouldn't seriously consider a trade like this. But this next one here, that's a beauty. They're the ones you like. It's pull back into the 50. We're in a big uptrend. Take that one. Back up it goes. So they're your best, your better trade setups. Just going to have a drink of water here. So then you get back into regular divergence sort of territory. So, all this price has gone up. And another thing too, when price does pull away from the MAs, either the MAs are going to catch up in price or price is going to come back to them. Generally, it's price coming back to them. If I am looking for sort of a divergence, the regular divergence, the further the way price is from the MAs, the better. So, we're getting up high here. And like I've said, sometimes these things do work very well. So you've actually had one sort of on that one first. So here we go. There. So there's your first high in this area here. You can see the MACD platinum and the price. And it goes up, you get a red dot here. So there's your first one. You don't always get it first go. If you just had your stop above the highs here, you would have been stopped out well and truly. This one would have worked out hedging, but again, that's just sometimes it works, sometimes it doesn't. So you get stopped out in this first one, then I sometimes get more excited when there's a second or a third one because eventually you'll get it. And this one here, that's a perler. That's your second one there. Take that. And that's just falling off a cliff sort of thing. It's not a huge move, but down to that 240 is about 170 pips, which we're on a 4-hour chart here on the US Japanese yen. So that's a good setup for a regular divergence. Again, keep the risk down, keep a stop tight in place, and you'll catch it. So moving along, then, and this is like now, by this dropping so far, you would have to think the trend is possibly changing. Not all, it does sort of keep on going up again, but it gets ugly. Comes to that 240. 240 is similar to the 200 EMA. So there's not much difference between them. That 240 LMA and the 200 EMA, there's not much difference. So again, it could be self-fulfilling, but price tends to sit around this moving average a lot. Now, it comes down, touches it and bounces off. Now, here's a valid buy signal. You could probably make an argument for, what have we got here? Yeah, where's that? Just having a look here. So this is, now remember, we're not seeing to the right of this dot, so we can't see all this crap in here. This is a hidden bearish divergence here. It's a little bit harder to spot, but it's from that low there to that low. Remember that it's slightly, we've got slightly higher in price. See, it's a gradual up, but the oscillators, the MACD is definitely down. So that is hidden bearish divergence. The fact that it's bounced off the 240 LMA, I like that. The thing I don't like is it's pretty well gone up and come all the way back down. And from my GAN training, that's a big pullback, which means this uptrend is losing strength. If it just pulled back to that 50 and bounced up there, it'd be good. But because it's dropped nearly back to 100, to me, it's losing strength. So it's a mixed bag. I'm happy to take the buy, and what I like is because of the slight bearish, hidden bearish divergence, I probably wouldn't go in with a stop here. I'd probably go in with maybe a safety stop, which I wouldn't go in with a stop because I like hidden bearish divergence. I like any hidden divergence. After all the testing I've done recently in the last month or so, I've been spending a lot of time looking at this. Hidden divergence tends to work out pretty much most of the time. When I say work out, if I hedge, it will work out. Not 100%, but geez, it's right up there. So we look at this example, take the buy, price goes against us, goes up again, gets us excited, then falls down again. There's a sell signal here. It's not a valid sell signal. The MACD platinum's still below the zero level. Take that sell, so hedge, so you're locking in that loss. It's the same position, remember? Now, that's, nearly 60 pips. Now, keep in mind, hedging is risky. If you just want to trade with a stop, put your stop below the lows, below the 240 LMA, and then just wait for the next setup. But I'm pretty confident with this hidden divergence, I'll hedge it. So I'll take the sell there, then I'll take this second buy here, which is still a valid buy. And not only have we got hidden divergence, we've now got regular divergence. So we've gone from hidden, did I call that bearish divergence before? It's bullish. I'm just using red. Sorry, I'm using red trend lines. That is bullish. Yeah, it's definitely bullish divergence. I should use green lines not to confuse you. So this is bullish hidden bullish divergence. So hidden bullish divergence. Then it's switched to hidden regular bullish divergence. So it's sort of two types of divergence on the same sort of move. So that even gets me more excited because generally when you have one followed by another, it's a stronger signal. Take the buy on this one and eventually that goes up nicely and you'd be well and truly out of that with a profit. So I like these anytime you got hidden divergence. And hidden divergence generally means a trend continuation. This one's not a great example because the trend it went against us, but eventually it continued. So I hope I didn't confuse you there. They should be green, these ones. Anyone underneath are green, on top of red. I'm just using the same color for everything. All right, so now the MAs are starting to tighten up. Now, am I thinking the trend's continuing? I don't know. MAs are tight. Happy to trade either way on when MAs are tight. So you're looking for better signals. You get a dot like this and you prices in the MAs, it's not a good setup. Not a good setup. Then you look for something, other little clues. Now, you know, you can just ignore it, move on, just wait. And there you go. You get regular bearish divergence. I'll get this right. Again, not a great setup. It'd be a low risk trade for me. It's, you know, B plus setup if that. Down to the MAs, get a few pips, 30, 40 pips, be done. Then we get this buy here. You could make an argument that that's a continuation. We'll go bullish again. So you can say from even there, across there, or even from there if you wanted to, just to be a bit more. But that's, see that blue, that is in that area there. It's a bit ugly and a bit hard to see. But if you wanted to, you could extend it down to there, say for example, and extend this one to there. It's still the same result. Still hidden bullish divergence again. I'm taking that every day of the week. And it's a good setup. The MACD Platinum's a fair distance below the zero level. You know, prices pop through because you're taking your entry on the open there. Prices pop through. And again, you have more hidden, regular bearish divergence. Jeez, I confuse myself here. So, you know, if you want to take that sell, again, higher risk into the MAs, probably get a few pips there, 40 pips if you want. Then again, it comes out. Trade I'd probably take. Prices come back. Not a great one. And the thing I don't like about it is the blue dot's very close to the zero level already. If you did take it, it only lasts a few candles and you're through the zero level, you probably just cut your losses and get out at break even or take a small loss. You know, you can see price has gone up, then it falls away. Don't muck around with it, just get out or put a very tight stop in and take your small loss. They're just not worth it when it's going sideways. See, then we have another little down trend here, nothing in there, not a trade I'll take at all, not even worth looking at. This one here, MAs, you'd probably have a dig at that one. Prices come to the 240, bounce back up, and you can see the MAs are slightly up, so you take that. It's not going to get you much, few pips. As soon as you get through that MACD Platinum zero level, stop, tighten up. Another one to the sell side. Everything's ugly. Price on the 240. And you're right at the zero level again. Not worth it, even though it's probably made a few pips. But then here's your regular bullish divergence. So we've got regular bullish now. It's probably one I'll take. Again, it's I'll probably go in with a lower percentage risk. Keep the stop pretty tight below the low somewhere. You just goes against a little bit, but eventually heads up. Might get a few pips out of that. So then you're going back looking. We're going back into it. You can see the MAs are spreading. So you start to think looking for buy trades, not so much sell trades, unless it's a really good divergence type setup. So with divergence, against the trend trades, you really want divergence. I'm not going to, unless it's double top or double bottom or something like that, or a big round number. You know, I've been banging on about the parity on the USD Swiss franc. You know, something like that. But your trades you're looking for, the safe trades, the conservative one, are these buys. See, we're back in an uptrend. Take the buy. Even if you had to stop tight here, you're not getting stopped out anywhere there, and you could run this up. So you got one there, then you get this little sell, which is not even a valid signal, then you get another one here. You could have stayed in, even if you got out half of this one and put a stop at break even, take this one. Goes up, wait for the pullback, move your stop again, or take half. You could take half off anywhere up here in this little area here, and don't be afraid to give your trades a bit of room to move. Just wait for the little pullback. It's going to happen. Then your stop goes to the next under there, and off she goes. Pulls down, put your stop up here, has another little dig up. Not a great setup again. See how, even though it's a valid signal, it's the price hasn't come back that far. It's a profitable trade, but you can see the market's gone up, it's pulled back, and it's gone up again, and it just You got this little double top up here. That's probably a time I'd be looking at doing a sell based on this one. That's a sign of weakness. The trend, like we're getting a long way from that. Like I said before, we're getting a long way from the MAs. And even though it's not you've got divergence there. If I'll just show you, obviously, because there's always divergence with the MACD Platinum. So even there's divergence there. Again, you're on the wrong side of the MACD Platinum, but one side's on the right side, so it's all okay. You could take that trade. You could have taken that one. You may have been stopped out, depending where your stop was. But then you take this one and you make up for that loss easily down to the 240 LMA again. See how it just comes down to 240 LMA and bounces around that again. Does that look familiar? I think it was back here. Look at this. Same setup. Again, trends change, heading down. We're on that same sort of level again. So you're always looking back, see where we're at. What's that? You can say it's a support level. Take the buy. Doesn't work out that well. Don't even think it's a. It's not even hidden. It's nothing divergence wise in there. You probably take loss there. No dramas. So let's just go forward and just see if I can show you some. So you get this divergence everywhere with this MACD Platinum, just unbelievable. So we'll try and look for a. So you just trade. See how the MAs are really tight. You can just trade these really tight, up and down, up and down. You're never in any danger. Just looking at this little area here. If you just, without even looking at the MACD Platinum or the MAs, if you just traded off the QMP, every QMP dot, and just say put your stop on the other side of the actual dot, you would do all right. It's not. It does pretty well. Just the QMP filter as a standalone does pretty well. You got to take a few losses, like where I'll show you where you get hammered. Like here's obviously a loss you get in that buy area. Up here you probably wouldn't get much. Here you wouldn't get much, but then you make up for it in this downtrend. Get a few pips here, get a few there, but then you get sort of smashed a little bit sideways. When I say smash, what's that? It's still a 65 pip move down to the low. I'm not saying you're going to get it all, but something like that, you're going to get smashed, then you get smashed. You might make a few pips there, but then you eventually get a good move and you'll hopefully make up any losses. So look at this again. Up it goes again, and weakness rolls over, back through to 240, meanders around and goes again. Another one goes up, comes back down, meanders around, goes back up. So let's see if we can find some. All right, so these are the trades you look for. These are the good ones. So bullish hidden divergence, hidden bullish divergence, uptrend. The thing is, you don't really spot these too much, because to me that's already a good setup. Price is going up, we're in an uptrend, pulls back. I'm taking that trade anyway, but it's got hidden bullish divergence. We've got high lows on price and lower lows on the oscillator. You could probably, here's another one. We're in an uptrend. Look at this across here. Same deal, hidden bullish divergence. Take that buy there, no matter what. Not great. You'd probably be out of it in here somewhere, or you could take half and move your stop, tighten up a bit. Let's see if I can find some other divergences. There's plenty of divergences. So we'll look at downtrends now. All right, so these are, you probably come up here and you look at, so we're in a downtrend here. These are crappy signals, not even a valid signal there. That one's probably, it's a valid signal, but again, price hasn't gone back into the MAs. You get this big candle. By the time you take your entry, you're sort of miles away. it's not a thing I'd be that keen to do. And as you can see, obviously in hindsight, we can see. But then we get this one. Now, because we've got high highs here, to me, I would take this, but I would know in my heart that it's not a great setup just because price seems to be pulling back up. So I'd take that. I'll probably take the loss, and I'll take this one too. But now we've definitely got it like an uptrend. We'd probably take a loss there. But then it comes up towards the 240. Now, what I'm looking at now is it's in an uptrend still, but then my confidence is getting a little bit better because the MACD is rolling over. So price has gone up. We've got regular bearish divergence. We're in a downtrend. That sell there, taking that, and that will make up for these two losses here easily. And we got pulls back. There's no real reason to take that buy trade at all. Let's look at the trend. We're in a downtrend. Even though the MACD platinum's a long way below the zero level, and you would have got a few pips out of it, but it's just not worth the risk. Why catch a falling knife? Looking for sell trades. And look what sticks its head up here. Look at this. Price goes back, drops, take that sell. Oh, perfect. Then we got sideways action. Now, you'd probably take that sell there. If I was in a downtrend like this, I'll tell you where my stop wouldn't be. It wouldn't be here. It'd be up somewhere, probably above the 100, or even I'd have a safety stop. The MACD platinum's a long way above the zero level, so you've got plenty of wiggle room. You could probably take a hedge if you wanted to, not necessary, though, and take the sell here too. We're still above the zero level on the MACD platinum. Price has gone into the 50 MA. Then it comes down, you're probably getting out of these, at least one of these trades or two of these trades as soon as the MACD platinum goes through. Take your loss or take a small profit on one and a loss on the other, depending on how you manage your trades. There's a buy signal there, not taking that at all. Another sell signal, taking that. Like you can look at things like, I'd be looking at, there's probably a good sort of resistance level there. Prices bang, 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 bang. I'm taking that sell there. Goes up, comes close to it again. You wouldn't have been stopped out, but you may have got out as soon as that MACD went through the zero level, or you would have tightened it up, and then it dropped down nicely. So buy, not taking it. Sell, not taking it, not valid. This one here, you can see it's getting near the end of the week. That's a valid if you'd want to take it. I'm just trying to think. There is, let's see if we can get out of this one. Because you can say that is, itchy nose. So, that's the low, and that's it there. Oops. So you look at that, you've got price heading down, but the MACD platinum is heading up. So we have bearish hidden divergence. So let's see, we take the sell here. Now this is something I probably wouldn't do because you're coming up to a weekend. That gap there obviously signifies, yeah, weekend. So take the sell, goes against us Monday morning, take the buy, hedge, and there's your sell. And I can guarantee you that would have got you out of trouble. You would have made a small profit there. And that is hidden bearish divergence. You will get, it'll keep you out of strife. I tell you, it's great. Yeah, it all gets a bit messy in here. I'll shut off and take that sell. If you took this sell here, this one I'm looking at now, it's probably a valid sell signal. You could sort of make an argument for it, like you've got price heading up, I guess, and the MACD heading down, because you've got to remember it's at that, it'll be at that area there, not on the mound. So you could say you've got divergence there. You took the sell. I'd be more inclined to have a stop here because that's regular divergence, and you probably would have got stopped out. But say you didn't get stopped out. Say you took it, and you just let it ride because your MACD Platinum's still above the zero level. This is somewhere where you just draw one of these trend lines. It doesn't have to be anything flash, just draw a trend line like you could draw it across the lows, or even something like, this is, every one of these candles is 4 hours, so you can see where they are. Price has gone up, it's come down, touched here, so you can put it in closer in there. I tend to go across the bodies. And as soon as you get a break of that trend line, and a big candle like this is it's not ideal, but you could take the sell, something like that, because it's still a valid sell signal. And you're still just above the MACD Platinum zero level when you get that break. So just maybe get a few pips down to the downside. I'm going to try and look for another example of the hidden divergence. There's a decent move on the chart. It's always the case when I'm looking for it, I can't find it. Might just switch to the daily on the same pair and have a look, see if we can see them. These are my trend lines. Let's get rid of the left. All right, what are we looking for? Hidden divergence. Geez, easy spot when you're not looking for it. Look at this daily. Love those double tops. See, on a daily, that's an excellent signal. I would nail that every day of the week. That one, take that one. Not only have you got double top, the MACD Platinum's going down, so there's divergence there. Take that. Oh, there's a hidden from there. Be close. Yep. So there's a hidden divergence. See that stuff? You just take them. Take them every day of the week. See one there? Nope. There's one. No, it's not. I'm talking to myself. Yeah, see how price goes up and it's getting so far away from the MAs. Eventually something's got to give, come down. Especially when that's going up parabolically sort of thing, like straight up, and the MACD is going the complete opposite way. There is going to be a turn to the downside. Happens all the time. Here we go. Let's have a look. Here we go. Look at this. Again, this would be a simple downtrend trade, but it's got hidden bearish divergence. I've been saying bearish over here. That's bullish. So bearish divergence. Should use different color trend lines. So yeah, that's a great example. MACD's gone higher, price is lower every day of the week. That's your safe. That's your A+ trade. Anything like that in a downtrend or an uptrend, it pulls back. Then you got the bearish divergence, hidden divergence with it. Take them trades every day of the week. Look at this. These are the trades you take. That's not a great one, but that's a valid setup. This one, close. No, this one you could make an argument that really, you still wouldn't lose, because what you would have, your stop would be up somewhere high because you're in a downtrend. Look at the way the MAs are stacked. So you're taking that trade. It goes against you. So what? Your stop's going to be up here somewhere. You're in a downtrend. Give it some room. Wait, then take another one if you want. You still, even if you've got a stop, here's another one. Take that. You stop. Just move your stop down above the highs. And, this is just about a double top here, and we're in a downtrend. Take that one. Look at that. We come down, nothing in here. Goes up. You could close part of these trades out. You don't know how long the trend's going to go. And you get this beauty, and off you go again. Another little one here. Take that. It's good when you're in a trend, but, and if you're in this, here we go. We'll have a look at the upside, see if we see anything. So there's your A+ setup there, that one there. Price has started down here, and I'll throw the fibs on, and I reckon that's going to be pretty close. So say we'll go below just anywhere down there. There's that high. There's your 50, 61.8. So it's come back there. That's your perfect setup. You don't need to use the fibs. I'm just showing you. After looking at charts for years, it looks to me great setup. MACD's a long way below the zero level. MAs are spreading. And guess what? Hidden bullish divergence. If you see that with this A+ setup, take that and just ride that up, ride it up, ride it up. And see, price gets away from the MAs, away from the MAs. What are you thinking? I'm starting to think it's run out of steam. It's got to come back to the MAs. It does. Then it goes up again. It has another little dig. You could take the buy there. You'd probably base it on, you could even say that is hidden divergence also. Not great, but we'll see if we can, all right, we'll see if we can work our way out of this one if it goes against us. So it's just, yeah, it's touch and go. So, all right, so we'd say we take the buy, we stay in it, it goes against us, we take the sell, take the buy, where we're going up, and I guarantee you in that little area there, yeah, you'd easily get a few pips profit, definitely break even with those 3 trades. So it worked out all right. I don't know what happens to the right. Yeah, because we've gone through the MACD platinum on the zero level. So that's your A+ setup in there. Like here's another big uptrend. So you can see this is where it gets a little bit frustrating. Hang on a second, I'll move it up. You know, it's been a bit of sideways action here. You could probably take a few of these little trades just to test the waters. Depend on, yeah, there's nothing really exciting in there, and we're close to the price, the MAs. Buy, take a sell maybe in there. Then you come down and we bounce, get below the zero level. MAs are getting really tight. I'm going to trade both ways. Take that buy there. Price hasn't come back. You'd still be in this buy though. You'd be crazy if you close that one out, because you know you could be trailing that with stop. You shouldn't be stopped there. Yeah, I know it's hindsight. I know that. But here's a good setup, and this is like, this will be close to it's just about divergence. So you probably double bottom on the MACD platinum there. It's close to it. Could probably say it's double bottom there, which means it's going to be divergence, because there's your upper. That's your A grade setup there again. Not a perfect one, but that's its ideal setup. Then this pullback going again. See how we've gone up and we've had that big pullback back. I'm starting to think there's weakness in that trend. We've taken out the previous lows, so the structure has changed a little bit. So I'll take this trade, but it'll be with a lower risk, and it works out all right. And it's, you know, look how far the MACD's below the zero level. You can see it pops up, doesn't break that previous high, and it comes down. It's a weak sort of setup there, you know. Like if you looked at this one here, it's not. I wouldn't have too much faith that we're going to go up higher again, but it's probably a trade I'll take, but lower risk and with a stop in place. And this one here would be the same. Then it does break the previous high, but it's not convincing. The MAs are tightening up. So it's just a matter of looking at the big picture and seeing where you're at. So hopefully that, I'm not sure if that's what you were after when the request came through the Facebook group, but you know, I spend hours on these charts, and you know, as soon as I see something like this, I don't even have to look at the MACD. I know what's happening. That's a sell every day of the week. You know, when MAs are tight, trade both ways. Trade both ways. Just keep it tight. When you get something like that, bang, load up. You know, something like that. You know, that's this. Take them. Maybe that same. You know, like it's even on, like, we'll have a look at it. I'll go up. We'll have a quick look at it. Say an hour chart. See if an hour chart. This is still the same pair there. You know, in a downtrend, just take the sells. Ours a little bit ugly, a bit harder to trade. You know, take the buy. You know, take these sells. Take these sells. Take. You know, you're going to get stopped out. Not, every trade can't be a winner. We're in an uptrend. Take the buys. Here you probably would have got stopped out. Waited. Take this one. Bang, up she goes. You know, there's trends everywhere. And if you just want to wait for it, if you made one rule that you only traded when the 3 MAs were stacked in the one direction and just took the trades with the trend, like something like this, you'd do it right. You can't really stuff it up. You know, if you just look at every pair, you know, like take that, sell. It's a great setup. These are buys in there, you know, like this buy. Even that one's, and look at the MACD. You know, so there's plenty of these trades everywhere. You know, look for the trend. You know, just take them. The MAs are up. Take the buys. You know, nail something like that. Pay your rent for the month. You know, sell here. Look at this down. Bang. You know, you just got to be patient. You don't have to force trades. You don't have to. If you just want to trade with the trend, just trade hidden divergence. Practice hidden divergence. All right, guys, I've probably rabbited on long enough. I don't want to bore everyone to death. So hopefully that'll give you a better an idea. Like I say, get on the historical charts. I may have stuffed up a few of those bullish or bearish divergences because I was using red lines for everything. But generally, if price is on the highs, it's bearish. And if it's on the lows, it's bullish. So my apologies if I confused anyone there. And that's about it. And thanks for watching. And if you do like these videos or you want to subscribe, feel free. Much appreciated. Or even hit the like button and we'll take it from there. All right, everyone. Have a good night. And I will chat to you guys probably tomorrow or Wednesday. Probably Wednesday when I do my weekly analysis video. Cheers.